Welcome to TheoTrade. This is Don Kaufman. It's April 29th, 2019, and you are watching the TheoTrade evening video. We are moments after the cash close and awaiting Google's earnings announcement. Yeah, that's right. Google, which effectively was up almost $20, and that number might be out right now. But Google was up just shy of $20 in the cash market hours. It does appear we're starting to see some movement inside of Google right here, right now. Google pulling back. Now, let me begin with this. It was gonna come out a few minutes later, but looks like again Google may be out. Google has right around a $47 expected move on the week, and closed again right around $12.96. You can see in the after hours here it's trading. It's trading. I got to tell you, I'm going to freeze the screen here real quick. This is kind of fast and loose. It's $5 wide bid offer spread. So again, moving about $30 here in the aftermarkets. Obviously, the Google numbers are out. The reason we had to wait for some of the Google numbers is, well, we're going to talk a little bit about Apple earnings here in a moment. And again, I think Apple earnings are going to be in large part totally dependent upon what some of the Google numbers happen to be, meaning that Apple is going to readjust in price substantially based on the Google kind of adjustment here. In fact, to kind of display this to you, if you take a look at Google right now, so what's Google down? You know what? I just love talking about this while it's going on. Look, we have about a $47 expected move, and if you take just a quick glance, I just froze the screen right there. Where does Google happen to be? Almost on the button of a $47 move. Again, almost on the button. And that's why I talk about efficiency in the marketplace. That's why I talk extensively about these expected moves. Now, we may oscillate a little bit outside, if you will, the expected move in the after hours. Obviously, we haven't even had the conference call inside of Google. Nevertheless, the expected moves, people, these things carry tremendous weight inside of the marketplace. Now, as I was kind of inviting this a little bit earlier, if I take a look now at Apple in the after hours, Apple is going to be moving a bit on some of the Google news. So it's going to reprice Apple to a degree. It may also, depending upon how heavy some of the news in Google is, reprice some of the implied volatility. So rather than me kind of, contemplate a bunch of trades today, we're going to talk extensively tomorrow morning in the TheoTrade chat room about some very specific Apple trades. Looking at the implied volatility as of right now and the expected move is under $10. And on a $200 stock, you're looking at what? Less than a 5% move that's being implied over here. A 50% implied volatility on Apple isn't necessarily awe-inspiring. I'm kind of giving a couple of hints to what I'm thinking about doing. But I'll tell you what. Apple has been spectacular at adhering to its expected moves, which may actually give us, a chance at a couple of different types of butterflies on the edge of those expected moves. Now, with that, again, I'll be covering Apple tomorrow morning. With that, let's cruise over to really where I think my focus is going to be in large part the remainder of this week. And that happens to be none other than bonds and specifically the financials. So, I was talking about this a bit on the weekend update. The FOMC meeting, it's coming out this Wednesday. And the FOMC meeting obviously is going to influence the bonds to a larger degree. Now, the bonds, they backed off today about a half a point. Okay. But the bonds, again, they've been in a rather tight range now for about 2 weeks of trade. They really looked like, if you asked me, like last week, they looked like they were about to break back out to the upside. They very well may still break back to the upside. In fact, if you take a look at the bonds, just into the close here, picked back up a little bit to the upside. So if the bonds break to the upside, it's going to take interest rates down. Now, many of you don't necessarily trade the bond market. Or the bond market, that's not what's getting it done for you. But you have to understand the influence of the bond market upon the financials. And this is and should be, a kind of critical area of concern of everybody involved inside of the markets as this week kind of progresses. So what's the area of concern? First and foremost, the financials today, for the most part, these little monkeys kind of held the market together, meaning that they were up 1%. Now, the financials are up 1%, in a day where the S&Ps, let's just call it what it is. The S&Ps finished massively unchanged on the trading session with the financials up 1%. What what kind of gives? First of all, they were up 28 cents to be specific. And if I pull up the financials, okay, and I go over here to the trade tab, what I want you to see is the implied volatility for this week. Okay, the implied volatility continues to bump higher as time moves forward. So to kind of show you what this means, okay, first, the implied volatility is 19%. That's 19% volatility for the next 4 days. You're like, okay, whatever. How does that affect me? Well, compare that to the spiders. Okay, the spiders happen to be the S&P 500. The spiders for the next 4 days are sitting right at about an 11.62 vol. So, looking at the financials, and by the way, the financials, I would fully expect the financial volatility to pick up even more. So the financial volatility is like what? It's twice. It's literally the financial volatility is twice pretty much what the spiders happen to effectively be. Why does that really matter to you? Because it's going to move markets. One of the things that really surprises me here is that the spider volatility is this low with the financial volatility this high. And you can see that the expected move in the financials is 48 cents. Now, you're like, oh, okay, I maybe get it. Some high volatility in there. No, what you need to get is that over the course of this weekend, and all I did is just went to Think Back. And if you guys have ever seen this, is the Analyze tab in thinkorswim. Think back, it's end of day, it's end of day data. This is a non-trading day. I'm just showing April 26th, which was Friday's trading session. Take a look. We actually closed on Friday with a 15% implied volatility with what? A 47 cent expected move. So it was a 47 cent expected move, except today, the expected move has actually gone up. So people talk about the decay of options. These options not only didn't decay, these options actually added a little bit of juice, a little bit of premium to them. So what we're effectively saying in the financials is we're ready to move. We're ready to move. And the financials, okay, have been, people will argue all day long, it's technology that's taken us to new highs. Really? Because without the financials, we do nothing. Okay, absolutely nothing. It's the financials breaking above 2650 that actually gave the go-ahead for the S&Ps to actually head to new highs. And here we are inside of the financials. Now, again, we've come to this kind of critical juncture this week with the FOMC meeting. The financials are really puffing up the implied volatility much more so than even some of the more pivotal FOMC meetings. So now we're in a situation to kind of, what gives. First of all, trade the rest of the week. I'm telling you, the financials, it's going to be one of the places that you're going to check out. Obviously, okay, we're very mindful of what's going on inside some of the big technology. Now we have Apple down about 50, 60 cents in the after hours. Okay, Google, oh, look at that. Google outside the expected move. Again, the day is young, but Google is outside effectively of its $47 expected move, and it's taken the markets a little bit with it. Okay. Have no fear. I say the expected move is likely to win this one out. Wouldn't be surprised to see Google bid right back up to the 1250. Nevertheless, as we continue on this week, again, I know a lot of people, their focus is going to be towards some of the earnings, but the bigger opportunity you might be missing, okay, and that could be inside of the financials. The types of trades that I would consider. First of all, okay, we went through this in depth literally this past weekend with the infinity spreads, okay? Look at both sides of the marketplace. Look at both sides of the marketplace and recognize how opportunistic something like the spiders happens to be. What's opportunistic about the spiders right now? Okay, the fact that we're sitting at absolutely rock bottom implied volatility in products like the spiders, yet one of the largest sectors, okay, the financials are ripe to make a move. That's something that you really need to pay attention to in the next couple of days. There's not a lot of risk metrics on this screen. The marketplace, okay, is literally today asleep at the wheel. I mean, the S&Ps, okay, did we even crack 1 million contracts? No, not even close. We're totally asleep at the wheel with, again, implied volatility building in the financials. Not only do we have the FOMC meeting, okay, but we also have the jobs number effectively at the end of the week. We've got a couple of bond auctions at the end of the week. This, people, okay, is what should take your attention throughout the course of this week. I'm actually going to be placing a couple different trades inside of the financials. Stay tuned. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.